Hey, I hope you're doing well today. Steve with eXp Realty coming at you. So, I wanted to give you some information if you're married and looking to buy a home, or if you're engaged and thinking about buying a home. So, when you're married, you share debts. You can't use their credit without using their income. For your significant other, you can't use the income without using their credit. So, sometimes people come to me and they say, Steve, I want to buy a house. I have good credit, but I'm a stay-at-home mom. My husband doesn't have good credit. He makes all the money. Unfortunately, you can't use one's credit and the other's income. You have to use both your income and your credit. This is a plus and a negative depending on the situation and how bad your credit is. If you don't have credit, or if your credit, you have a few late payments, or you maybe don't have a lot of trade lines. A trade line is a credit card, a car payment. Typically, you want to have about 3 trade lines, so 3 credit cards or 2 credit cards and a car payment, but you don't want to go into a lot of debt to build credit. You can have 2 or 3 credit cards with a $500 limit, and maybe have a $50 balance, $100 balance. Use them a little bit every month, pay them back. You'll build good credit within usually 3 to 6 months. 6 months to a year is where you typically want to be at to show the consistent payment. You borrow it, you can pay it, but sometimes people stop using their cards because they don't want to go into debt. That can hurt you if you close out a card. If you don't use your card for a certain amount of time, they'll actually close it out on you, and that can ding your credit a little bit as well. Paying off credit cards, paying off a card in full and not using it can hurt you. Credit is built by using the money, borrowing it, paying it back on time, or paying it in full every month, but using it and showing the usage. So, a couple situations we ran into recently is husband and wife were married. She has good credit. She makes the income, but he makes less income, doesn't have great credit, so she doesn't qualify. In certain situations, if one person making the most money has a good credit over 700, then they can go with the conventional loan and not have to include the significant other's debts or income. But say they're around 650, 680, it's going to be harder for them to go with a conventional loan. Typically, you want to be over 700 to go conventional. So if you're FHA loan, you have to include all the debts of the married couple. So if you're engaged right now and you're thinking, oh, we're going to get married and then buy a home, you may want to think about that. Consider pulling each other's credit, seeing where you're at, where's your income at. Depending on your debts, you may be okay just going off of one. If you need to build credit, maybe you want to build credit for a couple years before you buy a house. But I just wanted to give the info and the tip and spread some knowledge, because we have a certain situation where they're separated but they're not divorced, and she's trying to buy. She has good credit but not good enough to go the conventional route. But depending on his credit, and if he even wants to sign, if you go with a conventional loan, your spouse still has to sign. It's called a sole and separate, which means that they're not on the loan for the lender. They're not basically responsible for the financial debt, but typically, really they are, because you're married still, so your debt is their debt. But you can still get a loan by yourself. A conventional loan, the stipulations are a little different, because if you have 700 credit score or higher, you can go with the conventional loan. Debt to income ratios are a little bit less, which means, depending on your debt and your income, you may not qualify, or you may not qualify what you want to qualify for. Like, say you make $3,000 a month, your significant other makes $3,000 a month. Using the $6,000 total is going to get you qualified for a lot more with your debts. But if you can only go off your $3,000 a month, typically you need to be at 45% debt to income ratio. That puts you, $1,400. Say you have $500 car payment and that's it, then you're going to qualify for about a $900 house payment. So that's how it works. We take your gross income, it's typically 40 or 50% of your gross. Then we subtract other debts like credit cards, student loans, car payments, and what you're left with is what you're qualified for a house payment. So in a lot of cases, people need their spouse's income to qualify for what they want to buy. But if their credit's not there, then then they're not going to be able to qualify for what they want. So sometimes people have to go get a divorce, legal divorce, and then they can buy themselves and qualify for what they want. Whether they decide to get remarried or not is up to them. Hey, it gives you the opportunity to have a second wedding that you maybe never had. If you want to have it with someone else too, that's an opportunity. Just kidding. Hopefully this gives you some value. If you're married and thinking about buying a home, shoot me a message and we can pull your credit, pull your spouse's credit, check your income, see what you qualify for, separate, together, depending on where your credit's at. Sometimes we can run a credit simulator and get you 50 to 100 points if you pay some things down. If you, the good part about it is, say your spouse has 3 or 4 credit cards and you don't have any, you can get on your spouse's credit cards as an authorized user. And now those trade lines are yours, so that could actually increase your credit and help your credit, especially if they've had them for 5-10 years. Maybe you just got a credit card a couple months ago and you don't have an established score yet or a good credit score. Jump on your spouse's card as an authorized user and it'll help your score go up, so that is a positive. But depending on your spouse's credit, you may want to check it before you sign that marriage certificate. You never know. Make sure they got life insurance as well. Just kidding. But hopefully this helped you out. If you're engaged or you're already married, let me know what questions you have. Depending on your debts and your income and your credit, we'll see what we can do to get you both qualified, or go the solo route, or if you want to possibly buy before you get married. Happy to help. Steve with eXp Realty. Have a good day. We're in Albuquerque, Rio Rancho, surrounding areas. We have referral partners, business partners